Yeah. Welcome, everybody, to the Work With Me stream. I'm your host, Chris, the DeFi professor. Uh, just give me a second. I know I gotta mute Den.show. Okay, we're good. Sometimes Den.show gets a little, just doesn't, just kind of keeps itself open. So, um, let me just get over and just let everyone know we are live. Okay, so this is the Work With Me stream. I do this stream every Monday, generally between 1 and 2 p.m. EST. And the whole purpose of the show is I have a job to do as co founder, head of fulfillment, director of Happy, whatever you want to call me, at Beacon DeFi, my education and onboarding company to help everyone easily, safely, and securely get into the world of decentralized finance and blockchain investing. The We have a weekly newsletter for our mastermind that goes out, and it just breaks down the week's events that are the most important to making their decisions. Obviously, none of this is financial advice, and then it also is that's basically what it is. So it's to come up with the news articles for that. Now, there's a lot of news that gets talked about, but on this stream, I mean, I have to do the legwork anyway. I have I have I wanted to say vibe code. I did vibe code, but I did code and debug, a utility that helps with all of my aggregation. So that's one spot, but I'm going to go here into my RSS uh, and Twitter feeds to kind of go through and see what's currently going on in the world. So we're going to go ahead and head over to the share screen. And again, this is using my aggregated stuff over at Feedly.com. Shout out to Feedly and their team. I've used this for years. In fact, let me just make this bigger. I used Feedly when, basically because I used to use Google News when it was the RSS reader before they took it away. Get this up here. There we go. And so we'll go through the news of the week. A couple things I did want to talk about before we get started today. I wanted to give a shout out to Rachel Wilkins and the rest of the CreatorFi cohort number 1, right? Or it could be cohort 0, I guess, depends on how you look at it. So hello to my fellow unicorns that are out there either watching live or maybe catching this later on. It was a great 3-day cohort thanks to Base Blockchain, the layer 2 from Coinbase, for sponsoring that. A really great 3-day session where we learned what it was about to be a creator. Really great insights from very important figures in our creator economy. And I'll be honest, it was a life-changing experience for me. Mainly it gave me renewed vigor, I guess would be the word to use, a new energy. And I come to you today very much inspired to continue creating content. What really kind of stuck out to me is, and this was just the way that the cohort was structured. A lot of the people in the cohort actually had never really done an on-chain transaction. They may have had some adjacent connections, or they knew of the space, but many of them had never used CreatorFi. What they're using CreatorFi, I've referred to it as Creator Capital Markets in terms of how the tokenomics plays go. But there's a lot of people who came into the cohort had never been on chain. So that was a really interesting experience because we were well outnumbered. I think myself and maybe 2 or 3 others. Yeah, I think 2 or 3 others who actually have an on-chain presence. So it told me again how early we are to all of this tech. And that was the part to me that was really special because we could share the same pains, the trials and tribulations. Just our sets of tools were different. So to me that was really inspiring. It let me know that my goal to be a resource in this space will continue to happen because there's going to be an influx of people who are going to continuously be coming into the Web3 DeFi crypto blockchain space over the next, let's call it, couple of years. And it's my hope and my goal to be a huge resource in helping people understand how they can be a part of this on-chain, blockchain-based economy. Because there are a number of advantages to being in this space over, even being monetized on Twitter, on YouTube, which I am both. Uh, the difference is that there's a huge barrier to entry when you use things like YouTube, like Twitter, even like Facebook, TikTok, Instagram. There's barriers there where you just can't go on and just start creating content and building an audience, creating discoverability, having the maximum tools at the ready for you to create content. Not that you necessarily need them, but it certainly helps to be able to redirect people to links, especially if you're looking to monetize your following in terms of support, or even just having the right numbers to get sponsorships, brand deals, collaborations, yeah, stuff like that. So I want to just give a shout out to CreatorFi. We are very early. I know that they're already planning on having another one. That was some alpha dropped in a space that I was just on in the last 90 minutes. And I'm really excited to see what comes of this, because there's a lot of great creators who are looking for new avenues to just feature their content, mainly because there's so many ways on other platforms that you can easily be silenced, easily be deplatformed. YouTube specifically is not spending any or sending any algorithm ads to things that feature crypto and various other things. So it's let me just say, as someone on the other side in terms of creating and producing content, it's a pain in the ass. It really is. So let's get into the news, because that's what we're here for today as part of my little research stream. So let me just refresh here. A lot has kind of happened. The big news of the day really is just where the market is going to be. And there's a couple of reasons for this. A lot of this is really more politically motivated, right? Let me see. I don't have to talk about digital currencies anymore. Let's pull up CoinMarketCap. The reason we're doing CoinMarketCap is, full transparency. I am now an approved creator on CoinMarketCap, so just doing that piece. Now, am I monetized from you watching this and me mentioning that? No, of course not. But just out of thanks to them for reaching out and wanting me to be a creator for them. That's what this is. So, looking at the market, we're still up from where we were last week, and that was a big leg up. As we I think Bitcoin reclaimed 95, 97, around that area, and people are wondering, are we at that psychological breakthrough to punch through 100K back up towards all-time highs? And I think the answer right now, ETH reclaiming 33 was crazy, in my opinion, but it's good. Obviously, we want to see those things, but I think the answer is it's still a wait and see game. So again, for all of you who are out there trading, fear and greed's at 45. Please do not take a ton of leverage, because you might get stomped, especially after the news this morning that sent the markets into a little bit of a free fall, and a lot of that is about tariffs and trade deficits. Trade wars are no good. It puts the market in flux, supreme volatility. Now, if you want to play that, then obviously that's kudos to you. But most people don't, right? And that's the reason why we believe so much in DeFi, because we truly believe that 90-95% of traders lose in the game of trading, right? It's a PvP situation, a player versus player environment. Why not be part of the PvE, or the player versus environment land, and get into strategies where you profit off the behavior of other investors? That's the key. Now, I can't say that you won't get that if you do, perps trading, or you're taking leverage or margin or hedging your bets. That's all fine and dandy as well. But I've had much more success doing liquidity, concentrated liquidity, other type of liquidity provision plays, fixed rate farming, all these things that are out there to profit off the behavior of other investors. Okay, So let's see. The big indicators I'm looking for right in this section right here. BNB staying put around the 900 round is good. XRP, well, I don't know what's happening here with XRP, but they have been bucking the trend for the last 2 weeks. We've actually seen them, have a bit of a sell-off. So we'll see what happens there. Are people starting to lose faith in XRP? That I don't know. But there's some things we'll talk about that XRP is on the we'll call it the non-crypto side for now. Solana at 134. We'd like to see, this back up, but it is starting to trend in the opposite direction. So, a lot of interesting things on the timeline. Not only are we worried about just overall macroeconomic and global affairs, I saw somewhere, and I don't know how. So the idea that alien life being announced somehow, kind of like the what's that movie with Morgan Freeman as the president? It's not Deep Impact. It's the other one. The other one, right? Where people freak out because of an extinction level event of some sort. But they're going to, if there's this claim that alien life does exist, and frankly I think that it does, it could send markets into a bit of a frenzy. So we'll see. Now this is just one part of the picture, right? I don't really cover commodities, equities, things like that in what we call traditional finance or TradFi. But we'll see exactly how it weaves together. All right. Let's go into the news real quick here. So, yeah, Ethereum transactions are on the rise. Gas is falling, which is kind of interesting. So if we look at ultrasound.money, one of my favorite sites to track the progress of ETH, just for lore's purposes, I am a believer that at some point ETH is going to flip Bitcoin. I know that sounds crazy now, but I am in this for the tech, and I do believe that Ethereum will play a critical part in the world coming on chain. The only issue with gas being so low on Ethereum, unless just transactions go through the roof, is that they burn Ethereum supply with every transaction that goes through. So if there is cheaper gas, unless there is a lot higher of volume to meet that lack in cost of transactions, they're not going to burn enough Ethereum to keep ETH from being an inflationary asset. Now, part of the roadmap that Vitalik Buterin, the co-founder of Ethereum, put through is that they want to scale through layer 2s and layer 3s and beyond. And leave the settlement to layer 1, which is generally why layer 2s and 3s are much cheaper in gas. Pennies, fractions of pennies, as opposed to layer 1 Ethereum, which can be pennies to dollars, to many dollars. Does anyone remember the days of, hundreds of dollars to do transactions on Ethereum? Even just for balancing your convex pools? Those are days I don't miss. But we'll see exactly where this is going. Is the e-supply actually going down? Huh. Well, no one's heading for the exit anymore. So this is good to see. Anyway, back to it. The reason, and this is the difference between Ethereum and Solana, right? Solana, if you've never been to Solana, it is what I call the people's blockchain. It's where a lot of everyday people use blockchain and may not realize it due to e-commerce and a lot of younger people, a lot of NFT projects. Now a little bit of DeFi is out on Solana. Solana transactions are cheap, super cheap, and they went with the whole volume route because they have a lot more TPS than Ethereum. Ethereum is frankly quite slow when it comes to TPS, which is transactions per second. So they're going charge more, less transactions. Solana is like more transactions, less charge for the gas. And it's worked out well. I mean, they've both done really well in a lot of ways. They're working together now, at least, to try and bring more people into the space. I mean, this is fairly bullish. Fairly bullish. If they can continue to get increasing demand, people are coming back into the ETH staking queue. No, most people are not leaving now. In fact, I think the number was 0 last week of anyone trying to remove themselves from the validator queue. So it's really a big vote of confidence for Ethereum overall. So the concept I'm explaining here is the idea that you can stake if you purchase Ethereum Ether as the actual digital asset. You can actually stake it in a validator on the Ethereum blockchain, and basically you are funding consensus. Basically, you are securing the network is the idea, because you have a say, and you're earning a yield off of being part of the consensus, right? Because you'll receive a piece of that transaction. Overall, the rate's very low. I think it's like between 1 and 2% in general, maybe 3. It depends. But when you stake, you are locking it in, and you have full faith in the Ethereum. Well, you do it because obviously you're part of the tech. You do want to make a yield, but the more important mission is to help secure the network by being a part of consensus, making sure no one owns more than 51% of the network, etc., etc. There's a cooldown period when you want to leave. Like, I think it's like 14 to 21 days. So the fact that no one's leaving and everybody's coming back in is a great sign. After October 10th, or even just before October 10th, people were starting to kind of leave and head towards the exits. If it was because they wanted to get exposure in something else, that's definitely something you could put into play. Was Solana starting to creep up and become the more attractive ecosystem than ETH? Yeah, that could be it too. Both are getting a lot of attention from institutions, so it's good to see. It's good to see the activity. There needs to be competition in all of this, is the point I'm trying to make, and a lot more people coming back into what's happening in Ethereum is good. It's good. I'm going to save this article because it's good to have in terms of my analysis. Crypto trader turned $285 into $627,000 in one day. But some say the game was rigged. I mean, sure. I think the overall idea, like some people have said this, well, a lot of people have said this. It just takes 12 compounding flips to turn $100 into $1 million or something like that. You just have to flip it and go back in with all of that and compound it 12 times to be a millionaire with $100. So this is not a shocking number. And kudos to those who can actually do it. I don't truly subscribe to that, because the one thing that people can't chart in this space is sentiment. And that's the reason why, people cry about rugs and meme coins. Because all it takes is one seller to start a panic and people start running for the exits, right? So, pardon my nose whistle. Okay, so this is another part of we're just in a very interesting time. Precious metals at an all-time high. We've got pretty much a global standoff here with regards to bidirectional tariffs between the US and the EU. I think there's a lot of weird posturing going on here. I don't think the US would ever actually try to invade and take Greenland. I mean, there's a base already there, but I mean, I've seen things from they're going to invade to they're offering $10,000 to $100,000 per Greenlander to leave, or rather to support a secession from Denmark to become the 51st state. Well, it would be a territory, I'm assuming, not a state. But yeah, there's just a lot of posturing here. How does it end? I don't know. If I had a crystal ball, I think it's just all theater. That's just my personal opinion. There's a lot of things that are trying to be hidden, that are happening behind the scenes, that people don't realize. And that's really my job here, because I follow exactly what a lot of world leaders are doing here in DeFi. It's no secret that the Trump family has and Trump media has not only Truth Social, but they also have multiple ETFs coming out. They have one specifically, the Trump is it an ICO? I think it's an ETF, but it's Bitcoin, ETH, Sol, uh, Crow, and XRP. There's more of this that's going to be happening. They have World Liberty Financial. It's a DeFi lending platform powered by Dolomite for their markets. And yeah, I mean, the man has. They went and bought with all the profits from the Trump meme coin this time last year, exactly this time last year, and bought like 4.7 million of Bitcoin, 4.7 million of ETH, and 4.7 million of Sol, and then 47 million tokens of various altcoins in celebration of the president becoming the 47th president. The man's got a lot of skin in this game. So, and maybe that's what we're building to, because he wants to bring all of this on chain, all of the government, all of everything, in the name of quote unquote transparency, but also in the world of non-sovereign entities. The truth of the matter is, no country owns decentralized finance. It's a mesh network of computers under the flag of various different blockchains, because each of these mesh computers runs a virtual machine supporting a specific blockchain, whether it's Ethereum, Solana, Algorand, Avalanche, Sonic, Plasma, whatever's out there, Tempo, Arc, things are coming soon. That's all I'm going to say on it. Are we entering wave 5? Is this an Elio waves thing? How fun. We're currently in wave 4 of the major bull run. Ah, okay. This wave section. Okay, so I just want to frame this in a specific way. A lot of people think the bull run is over, and I'll give you some context as to why. And I'll be transparent. In our group, my other two co-founders, I'm much more bullish. They're much more bearish. The reason being, this bull run, which we called from a structural perspective on our Wednesday podcast back on like October 30th of October 27th of 2023, we called the start of the bull run back when BTC was 34K. If you think about it from that perspective, we've had this bull run for 1,000+ days. If you look at it from that lens, yes, the 4-year cycle is dead. Yes, this thing can't go on forever. So did we really see the top up here? Is this the top of this bull run? Now, the other part of the idea of this of cycle theory, at least, is that there's meant to be rotations. BTC tops, and then ETH, and then altcoins, and then we have some sort of hard landing. In my opinion, we're still going to have that rotation. I think that, by the end of the year, it's just going to be max pain. That's just my personal opinion. I'm happy to be proved wrong. We'll see exactly what happens here. We've had a lot of setup with digital asset treasury companies, or what we call DATCOs, like BitMine Immersion, MicroStrategy, MetaPlanet, SharpLink. A lot of these companies that have treasuries centered around one asset. What's going to happen when the bottom falls out and suddenly all of these and there's more than like 80 companies now with different assets that are DATCOs. If the market goes sideways or then straight down into a land of global depression, what happens to all of these companies who have a treasury that was specifically meant for assets that have suddenly are careening towards zero? Do they sell? Do they, continue the pain? We're going to have to see. But the idea here is to just position yourself, because we're still very early in the way that this will be the future of how we do business, the future of finance. And we'll talk about a couple more of those things soon. So I'm not going to save this, but let's keep moving. More ETFs are going to be approved over the next couple of months. I'm looking to see that. Oh no. Someone sold their Astra position. Oh, that's not good. My guess is this is probably someone who just wanted to take a lot of profit, which is fine. We tell people all the time, never apologize for taking profit. But it is interesting that Hyperliquid has extended its lead as a perp dex, and that is a decentralized exchange where people can swap between what are called perps or perpetuals, which is a DeFi native uh, instrument that kind of resembles an option. It's basically you don't own an asset spot, you just own the exposure to it. You can with a perp you can go long or short with leverage, margin, all of that. And that's what a lot of people like in this space. And the beauty of perps is that you get the same exposure that you would at a centralized exchange, a CEX, but you get to custody your own assets. And that's the difference between what we call CEXs or SEXs and DEXs, is that on a SEX, your keys is not your crypto, right? They can shut down tomorrow and your assets are stuck there. Now, the same can happen on a decentralized exchange, but you have the ability to at least figure out a way to remove it unless the liquidity is wiped. Then it doesn't matter where. But at least in DeFi, you have the ability to move your liquidity wherever you want because you are self-custodying your assets. And that's the important part about decentralized finance. So it looks like it's down 13% in the last 24 hours. Sustained weakness. And the thing about perp dexes is the only way they're going to be successful is if people are going to use them. And that's why Hyperliquid is the darling of DeFi right now, because they are, I think, 3.2 billion in fees, not fees, in TVL, but they're just pumping out so much in daily fees. It's coming back into the ecosystem. And Hyperliquid Core, which is the main perp dex, also has Hyper EVM, which is an Ethereum virtual machine blockchain that's actually built on the side of it. And the beauty of that is that they can talk to each other with no issues, with a full consensus layer, meaning that any asset that's on Hyperliquid Core can be accessed with DeFi services, decentralized finance services, so staking, liquidity provision, hedging, whatever instrument you want to put. There's roughly about 12 to 15 different in DeFi that you can choose from to make yield. That's all available to you as part of the largest perp dex in the world now with Hyperliquid. So hopefully this is either Aster becoming into a good accumulation value zone, or this cost possibly opens the door for another perp dex to come up and take its place and challenge Hyperliquid. It's not going to be GMX, Quenta Synthetics, or DYDX at this point because Hyperliquid ate their lunch. But we'll see. We'll save this one. All right. And I just mentioned this, geopolitical risks. This is no bueno for risk markets. Because people in a time of, in war and panic, they will most likely de-risk. Some will bet on it and some will win, because one thing we also say is bull markets will make you rich, bear markets will make you wealthy, right? So just kind of the way that it rolls. Hey, friends of the show at Henkel, we've had them on our podcast, which is every Wednesday, 1 p.m. Eastern, several times. Shout out to Georgie and the team at Henkel. They have found a beautiful way. I need to get him back on the show now that they're getting closer to launching Henkel. They've been in testing for quite some time. Is to be able to shield transactions in the open. See, the thing about some of these other blockchains is that with things like Zcash, Monero, stuff like that, you need a specific wallet. Even private blockchains like Alio, you need a specific wallet that is compatible. Now, you need that here with Henkel as well, but this works with existing blockchains that are already out there. It just has to create, it creates technically a proxy where you're where your transactions come through, all that happens, and then it exits. So no one knows exactly what the transaction was, nor do they know the actual addresses that were involved, because Hinkle will shield the entire thing in a proxy. It's a beautiful way to think about it. And it doesn't take away from the ethos of decentralization, as it currently stands. You can do all this through Hinkle, as opposed to needing a separate wallet for all that. Yeah, that's great. Huge, very bullish on this team. So definitely going to get Georgie back on. I'm going to reach out to him right after. I'm going to make a note here to reach out to him. So I can see exactly, what they're up to, because I definitely want to get him back on the show in the next couple of weeks so he can bless our communities with what they're working on. Oh, this is big news. All right, so let me get the actual announcement. I have it here. Let me see here. It's a post from the New York Stock Exchange. I'm going to pull up the actual press release. Where can we put it? Yeah, we'll put it here. Yeah, we'll put it here. Now, oh no. Oh, because I did that. Got it. There we go. I was like, what? Okay, so this is the work. This is the work of Circle working with the New York Stock Exchange. Actually, it's Circle partnering with ICE. Not the ICE that you can think of, the Intercontinental Exchange, which is the mother company of the New York Stock Exchange. Now, what they've done here is they have been working together with data to create a tokenized securities platform. Bank of New York has also been doing it, which is BK, and Citi. I guess we'll see where that goes. To support tokenized deposits across ICE's clearinghouses to help clearing members transfer and manage money outside of traditional banking. Yes, this is good. And this makes total sense. The New York Stock Exchange has transformed the way that markets operate. And that's Lynn Martin, president of the NYSE Group. So this is the part that I've been talking about on a lot of my content, where 2018 to 2025 was the innovation stage, right? The innovation, the integration, the ideation, the disruption, a lot of the ideas on how a lot of traditional finance, which only is open between 8 and 4 Eastern time, right? 8:30 and 4:30, 8 and 4:30 Eastern, Monday through Friday, and then closed on certain days, right? The on-chain world, not just crypto, the on-chain world is open 24/7, 365 in all time zones. So the ability for the New York Stock Exchange to lead with this technology, which I believe is fully from the partnership with Circle, this is going to massively change the way that we look at traditional finance, or what we call TradFi, because now we're going to start mirroring and tokenizing a lot of these everyday experiences into an on-chain wallet experience. Now, the day where I can go with my dividend portfolio, tokenize it, and then claim those dividends on-chain will be the next big evolution, in my opinion, right? For you to go to Solana, buy Tesla through backed finance or something like that, through X stocks, and then be able to, do call options even, any of that type of stuff, with regards to the exposure you have for owning that, and owning it spot on chain, by the way. This is where things are moving. This is where anyone in the world will be able to say that they own an actual share of a company that is either multinational or just in the United States. Now, there will be all kinds of regulations, all kinds of parameters to make that happen. But just the idea that we have made it to this point in 2026 is exciting. Do I wish it happened 3 years earlier? Yeah, but a different administration was here 3 years earlier with a big, difference in philosophical mindset with regards to how tokenization, securities, and digital assets works. Give the flowers to the team and the administration and even people behind the scenes. And I'm talking about Mark Andreessen and other people like him who are doing the legwork in the different boardrooms, talking to the different people, doing the legwork to make situations like this a reality. ICE also put $2 billion in Polymarket because of stuff like this. They see the writing on the wall. The reason why the Clarity Act is in trouble is because the banks don't want a run from banking to on-chain banking to happen. Because it's in the idea that it's going to take away funding from small and medium businesses who need it. Yes, of course, we want to support our small and business leaders. We absolutely want to. I'm a small and medium business leader. I need to have funding available. But we can't get it twisted and think this is not about shareholders, right? Because if you're a shareholder in Bank of America, in JP Morgan, and suddenly people are leaving that because they'd rather go to a decentralized entity that nobody owns, it's non-sovereign, and I can still go and buy my groceries tapping my phone anywhere that I want. Would I want that? Absolutely. We're in a world where I own my own assets, I self-custody, instead of going to my local brick and mortar bank who's going to absolutely give me the worst rate on the planet for my money. When I go to a and I love my credit union, shout out to Navy Federal, I get 0.025% on my savings. For me to get 0.5%, I have to put $500,000 in Navy Federal. It's not happening. Why? Because I can go on chain and get 4.5% on $5 with no fees, with no membership, with no credit check, with no tons of forms that I have to fill out. It's important that you guys who are you're skeptical about this, don't clip me doing that, that you need to be able to see where the future of finance is going. And yes, it's experimental. Do not put all your money in DeFi. Do not put all your money in digital assets and crypto, because you might be severely disappointed. Just like don't put all your money in real estate or the stock market. You should have a diversified portfolio. Will DeFi and crypto probably be the best risk-adjusted return you're going to have? Yes, absolutely. But you should still have a diversified portfolio. Why? Because you never want to overinvest. You never want to have all your eggs in one basket in case something happens. And there's no safety net in this space. We don't have an FDIC. Now we have entities who are providing insurance, like Aave is offering up to $1 million on their accounts once they start opening, which isn't here yet. It's still in testing. But yes, the future of finance is changing, guys. And it's going to be led by things like this. The sad part is, and I say this with all sincerity, there was a chance, at least for capitalists or just people with forward thinking, to front run institutions to this, right? But the reality is the opposite. JP Morgan, as much as Jamie Dimon has talked about how much he hates crypto and it's a scam and whatnot, they've been building Connexus, or what used to be called Onyx, for more than a couple of years, almost 3 years. It's been in existence. So that's a load of hooey, all of the stuff that he's been saying to the public, because they've been building institutional stuff behind the scenes for years. So have Microsoft, Goldman Sachs. I can name a whole boatload of companies who've been testing in this space for quite some time. And we're not going to get, the bank of Thread guy. I'm just sorry to pick on you, Thread guy, or the bank of CZ, or something like that. I mean, we could have had that, but marketing is a problem, right? So institutions are here now. They know that there's better rates in on-chain finance and DeFi, and they're going to find a way to carve a way in here and make it so that they can make the most money for their shareholders, not necessarily their customers. I'm off my soapbox on that now. South Korea busts $100 million underground remittance ring using WeChat. Please be very careful with stuff like this. While peer-to-peer transfer is nice, it doesn't come without its risks. Bridges are crypto's next FTX waiting to happen. That's 50% true. Some of the worst exploits in the history of decentralized finance happened on bridges. But it all depends on how the liquidity is managed. Okay, where's the one that I wanted to talk about? I'm pretty sure this 232,000 came from them just going all in, right? The equivalent of doing 12 daily doubles on Jeopardy. I'm not going to talk about this today, but there is a very interesting conversation. It has been, at least since before Bitcoin Las Vegas last year, which I was at. When I was on the floor, the biggest thing that was on the floor was, how is Bitcoin going to protect itself against quantum computing? Now, there has been since a lot of conversations to kind of temper a lot of the arguments, and there's a lot better non-Bitcoin tech out there that is going to be quantum resistant. So we'll see more about it as more of that comes around. But if you're following news, do be careful about this. There is something there. The U.S. Senate, the panel wants developer safeguards out of the crypto bill. All right, let's talk about this. So this is part of the Clarity Act, the Digital Asset Market Clarity Act is the full name. They want to remove developer protections. Chuck Grassley, and the community's top Democrat, Dick Durbin, told Tim Scott and Elizabeth Warren that of course he told them to them, they're part of the bank lobby. Of course they're going to do that. Would create a significant enforcement gap for decentralized digital asset platforms. Remember, no country owns DeFi. Of course there's going to be a significant enforcement gap. Now what they have talked about in the Clarity Act is that all decentralized finance dexes and other ones, and most of them follow, like to Ave's credit, they follow AML KYC laws, right? AML laws at least. But because you don't have to KYC in most protocols in DeFi. You're just you have to KYC at the DEX. But there's that. So they're looking to possibly do a KYC at the DeFi level, which was something that they didn't like last time. Such a gap risks attracting illicit actors like cartels and other sophisticated criminal organizations to decentralized platform. Again, part of this narrative that crypto and DeFi is used for trafficking and terrorism and all these other things that can't be traced. They say this like the US dollar hasn't been used to launder and do terrible things in this world. This bill would make prosecuting this conduct even more difficult. Well, yeah, because nobody owns it, and that's the problem. They like it, but they want the controls to enforce it, and that's the part of the philosophical differences that will always be at the center of decentralized finance. And that's just something that I'm very curious to see over the next 5, 15, 20 years how this is going to change. There's a lot to unpack here. What you need to know, regardless of how you feel politically about this, the Trump administration and the cabinet have pretty much removed crypto and DeFi as a regulatory risk. So a lot of this act is trying to bring back a little bit of that into the conversation by saying that, that they're not going to go after crypto companies at all. They're like, no, we need to have power to go after crypto companies, because there will always be bad actors in this space, right? It will need 60 votes. Main crypto lobbyist Coinbase. Oh, stop with that. Come on, Cointelegraph, you're better than that. Now, yes, Coinbase did pull its support last week because they said that it's a bad bill. And I get it. But there's also parts of it that are fairly profit related, I guess would be the word to use, right? Because the idea is that if Coinbase can't profit, then the bank shouldn't be able to profit either. Because the main issue here is the fact that per the new version of the bill, anyone who has a platform like Coinbase, one of the largest, if not the largest CEX in the world by number of actual customers, cannot give rewards to users for just holding stablecoins. Now, saying it out loud sounds a bit fluffy, right? You're like, well, yeah, I mean, wait, you're not going to allow me to do that? Because the bill wants you to only do it if the customer is A, staking, B, trading, or C, doing liquidity provision. Things that include a very long cooldown, except for the trading part. So if you have USDC and you're holding, or a stablecoin like USDC, and generally at Coinbase, you're going to have to stake that to earn a specific reward. They want the ability to continue to reward people, because the one part of the Genius Act is you can't have a yield-bearing stablecoin, or an yield-bearing stablecoin, I believe is the official word. Don't quote me on that. Go verify. As I say, don't trust, verify always. And the idea is that they're going around that by saying this is not yield, this is rewards. So the problem here is that Coinbase believes that if they don't have the power to do that, they won't have the ability to retain customers, which would affect shareholder return. That's the way I interpret it. May not be the best way to interpret it, but it is that I think that's a valid take. Because frankly, they don't make a ton of money off Base. They make some money off of Base, but it's not in the ways that you think. It's mainly off of sequencer fees. So we'll see exactly how this rolls out. Now, Coinbase is working with the banks to try and find a way around it, because they don't want to hurt community banks. Because this is on. Where is his tweet? Where is your tweet, sir? He said, because this is about community banks, right? Oh, Brian Armstrong. I love that. I love some of the needling that goes on in this space. Oh, I might not have bookmarked it. I try and bookmark as many things as possible, but that leads to a very messy situation. Oh, but now he's in Davos for the World Economic Fund. Oh, he's really going to push this now. And yeah, I mean, this is an interesting situation for President Trump, right? Because he is claiming that JP Morgan has deplatformed him. after the January 6th protest. So he's looking to I think he's looking to sue them. And you know President Trump, he doesn't like to sue people, right? Oh, sometimes this space can be fun. So we'll see exactly how this happens. I will tell you, I think this is going to push through with the changes that Coinbase wants, because President Trump wants that to happen. Because that also trickles down to him as well. Because as we talked about on the stream last week, World Liberty Financial has applied for an OCC, Office of Comptroller Currency, National Banking Trust License. Are they going to become a bank? No. We're not going to see branch locations of World Liberty Financial everywhere. That's not why these groups are doing it. Why Circle, Ripple, Coinbase, Paxos, PayPal, World Liberty Financial. They're doing it so they can actually play the game along with the banks, right? And I believe all of them except for World Liberty and PayPal have the conditional approval. I think Coinbase already does. So it's not about all that. It's about the bottom line, right? So sometimes it's worth looking into it and figuring it out. What's the real issue? And it's probably shareholder revenue, right? Because that's a big deal to them. They need shareholder revenue. Okay. Michael Saylor bought 1.2 billion in Bitcoin last week. That's not shocking. Animoka's Yatsu says crypto's Trump moment is over. Interesting. I'll have to look at that later. It's not really news for the readers. This is interesting. Forget Monero or Ethereum gains. Analysts call zero knowledge proof the only 7,000x breakout crypto for 2026. There is some framing going on here, guys. That is not what this is. What is up with this? Oh, I'm calling bullshit on this. Okay. So it's an actual blockchain called ZKP. I got it. Wow. Quote unquote leading analysts are labeling ZKP as the top crypto to buy for those seeking foundational value. All right. Let me make an example here. Yeah, this works. Do you know what this is? This is apropos because I do need to blow my nose at some point. This is a box of tissue. Facial tissue, I think, is the actual... Facial tissue is the actual name of this specific product. The brand of this product is called Kleenex. And Kleenex has kind of Xeroxed its way into, the everyday ethos, right? You're like, what are you looking for? Oh, can you throw me a Kleenex? Right? Kind of like when you're making a copy, you would do a Xerox. One second. Okay. This is what this is. Zero knowledge proof. In this case is somehow a brand, because an actual ZK or zero knowledge proof is a type of mechanism that shows consensus for a transaction. And when I say that, when you have a transaction on the blockchain, let's say you're going to swap ETH for USDC. Fine. When you send the request for that, it goes through a full system. I'm not going to go through all of it here, but just from a high level. It goes through, sent to a server. It then gets validated as a valid transaction between a network of nodes called validators. And as long as there is a majority or a consensus, then it's allowed to go through, approved, and then on its way for finalization and settlement onto the blockchain. Why it's called a blockchain? Because it is a long linear block, a chain of blocks. What's a block? A block is just a package, a ledger of a moment in time. So every so often there is a new block that's created. Transactions are inserted into it to get validated. It gets validated, then final and settled, and then added to the end of the chain. That's why it's called a blockchain, because it's a chain of blocks, and all that is in a block is just a ledger of transactions that need to be validated. Great. That's the way it's worked for however long it's worked. 3 years ago, they're bringing in what are called zero knowledge proof consensus mechanisms. And the idea about that is, I have this. I want to trade for ETH and USDC. And that's what this is. Me trading ETH for USDC. Or let me give a better example. This is a box of tissues. Okay. Here is a mathematical proof called a zero knowledge proof that you can go and have either you can prove or have a third party prove it. And that will give you the authenticity and the verification that this is a box of tissues. And because we have an environment where people will accept that, you will accept that as proof, because you can prove my mathematical equation saying that this is a box of tissues. No one's going to question. I apologize, guys. That's how zero knowledge proofs work. This is a brand, ZKP. There are multiple ways to do zero knowledge proofs. In fact, at ETH Denver 2023 for the past 2 years, I have met a lot of people who know nothing about blockchain, but they're data scientists, they're scientists, and they're mathematicians, because they all think they can figure out more novel ways to provide zero knowledge proofs. Now, are ZK proofs important? Yes, because they can allow all kinds of applications to provide authenticity for a transaction of any type. And that could be a publishing of a research paper in a world where people don't allow scientists to be free. It could be a swap between two assets. It could be, it could be coining of a news article. It could be a variety of things. There's no specific saying what it is. But ZK proofs just give you the ability to just say, okay, this is valid, because you can prove with the mathematical equation, the zero knowledge proof, that it's okay. And in this system, it's all of that. That's the mechanism for acceptance, not for trust, but it's for the acceptance. That's a whole other conversation. Anyway, I don't want to take this off the rails. Okay. So this is how this works. It's a DPIN, what we call decentralized physical infrastructure networks. You buy a proof pod, which will be used as a computational device to provide zero ZK proof proving through a network. Interesting. Well, this changes everything. Not saying because it's good or bad, but there's a reason why they're calling it a brand, because it's an actual coin that has utility by offering utility through an actual physical device where you buy it for $249 and users can earn up to $300 daily through computational tests. You're not, your machine's doing that, and you receive a piece of the pie. Because one thing about doing transactions in a ZK blockchain, because it has to be in a specific, blockchain specifically have to integrate this at the level, at the very core level. So ZK Sync is one example. Scroll, Linea, and a couple others are, they're compatible with Ethereum virtual machines, ecosystems, and they use ZKs, zero knowledge proofs, at the core of consensus. This provides nearly instant finality, by the way. The way that optimistic rollups work right now with like Arbitrum and Optimism and chains like them, they'll go through, but you can challenge it for 7 days. There's a 7-day challenge period. This is instant. I think they do 24 hours just to kind of give it that that latitude to have any issues that may arise. But for the most part, because you can prove that proof, it's accepted instantly. But there is compute that has to happen. That's why optimistic rollups are so much cheaper, because you actually have to pay for the compute of someone actually coming through and paying for the compute power to solve the zero knowledge proof, because it is very intensive. So overall, ZK blockchains are more expensive, but this is that, and that's what it contributes to these DePIN projects, because it does cost more money. That means they can decentralize the network more by offering everyday people to be a part of the network, much like a regular validator stake, right? So this is interesting. We'll see how this rolls. I'm going to save this, because I thought this was just about something else. But the fact that they have a physical product, that changes things, because now they're a DePIN project. Now they have a whole network of nodes where they take people who sign up, and then that all of that traffic is farmed out to them for them to be a part of securing the network. So there's something democratic about that in a way, right? Where you feel like I do have a voice. What I do does matter. Okay. Let's see. Yeah, Bitcoin, and we've already talked about this. You can go check it out. I'm not going to go too much into it. Really, airdrop hype created the surge in volume? You don't say. You don't say. I mean, that airdrops is the probably one of the best, outside of the pre-sale, one of the best ways to farm people. I mean, and we'll talk about this now. So one thing that is probably going to show up here later is what we're calling the death of quote-unquote InfoFi. Platforms like Cato, platforms like Cookie.fun, Wallchain, Zeet, and I'm sure there's a couple others. They got slapped with a rule change, a policy change on Twitter. And as much as I dislike it, to be honest, Twitter, X, or what we call CT, crypto Twitter, is has emerged as the biggest place for alpha or intelligence about projects to be born and distributed. In a way to quote unquote cut down on the AI slop, Twitter has revoked the access of the API by these companies, which were used to help bring stats and marketing data to companies looking to use these launch pads for their users to put out information, right? So Cato would say, let me use my new friend Monica from Creator5. She's a big recipient of a beneficiary of being an InfoFi. She signed up as a creator for Billions Network, for example. Shout out to Billions. Billions saw this as a marketing opportunity to get more news out about what they're doing, right? So they go out, instead of paying expensive KOLs that frankly may be full of bots, who knows? Not real people. They want people who actually are going to use their services. So they go out and find people like Monica, other people who are, you could say they're micro-influencers, they're just people with followings, to learn more about the new platforms on the next frontier, right? It's a marketing play. And generally, programs like Cato will give airdrops as well as the actual protocol to people who participate in their marketing blitzes by helping get the word out, bringing new users into the platform. Well, that all went away when Twitter made that change. I think it was Thursday of last week. the death of InfoFi. They also, as of yesterday, have changed the policy. So, quote unquote, reply guys, reply girls, reply guys, people who pride themselves on replying. And I thought some days I'll do 50 replies and I'm like, man, I'm spent. There are people who do like I saw 8,000. Someone reply 8,000 times in a 24-hour period, because I think it's 8 a.m. to 8 p.m. Eastern is the general cutoff time for measuring that, at least if you're monetized on Twitter. So that takes a lot of people out of the game right there. And hopefully this means more incentivization for people who create actual content on Twitter. I understand the decision to do it. It was probably through a lot of pressure, maybe even from people who support X. But yeah, people will rebound. People will do new things. Shout out to anybody who's clipping this, by the way, because apparently clipping is going to be the new economy, much like it is on YouTube and Twitch and other Kick and other streaming platforms. So people are going to be pivoting a lot. But airdrops have always been a really great carrot to dangle, right? Because let's say for billions, they have their token generation event, or TGE, if you hear that acronym, and suddenly people get an airdrop before TGE, and then at TGE, airdroppers come in, and what do? They take profit. They sell unless they have full conviction, they're still going to take profit, because you should always take profit. You never want to round trip your bags, as we call it. And then, hold a coin that goes up here, you don't sell, goes down here below from when you got it, and then it never comes back. You left a whole lot of money on the table, right? Not a great feeling. Airdrops will always be a great carrot to dangle. It was 5 years ago. It's still good now. So yes, if you see blockchains with huge hype, it's generally because they're looking for an airdrop. It's all about what protocols do after the airdrop to keep people interested. And that's the key. That's the value add. Steak and Shake buys 10 million Bitcoin. That's not shocking. Oh, sorry about that, guys. I am allergic to everything here on the brutally cold shores of Nebraska. I'm allergic to everything here. The grass, the plants, the trees. It's a problem, but it's home. Golden Cross for XRP. Interesting. Let's see where that goes. Oh no. I gotta save this for a couple of our members who are going and just scooping up little miners. Let's talk about this really quickly. So, on Amazon, on other websites, you can buy these tiny little small single board computers, and they're what they call them lottery miners, actually, is what they call them now. And the idea is that they are just put in with an operating system and connect to a mining network where you are just mining Bitcoin by yourself in what we call a solo pool. Now, from a proof of work perspective, just like I mentioned with the zero knowledge proofs, right? That's all in a proof of stake environment. A proof of work environment means as you make a transaction on Bitcoin, a miner goes out and takes your transaction, solves a mathematical equation with their hardware, and then if it works out, that is the proof of work consensus that you have that your transaction was valid. Now I can go debit from this wallet and credit another wallet. It's kind of crazy how that all works, right? Well, every block, they send out rewards for miners that solve equations. In some cases, most times it's just one reward that's given out per block. Now, the block, it's interesting here because in proof of stake ecosystems like Ethereum and all those others, block times are like milliseconds. Bitcoin block times are between 6 and 10 minutes. It's a much different way to think about things. Normally, they credit multiple miners with the reward, and that reward, each block, is paid out in Bitcoin to, users. In some cases, I think it's, you can go look that up in terms of how much it is per block in terms of rewards. It's more than 3 Bitcoin. But two independent miners mined full blocks and won. Remember, countries have full real estate parking lots. Like, I think in Iceland, there's like a gigantic farm built on an island powered by hydropower. All of this to mine 1 block. And for all of that infrastructure there, wind farms out in Iowa that are, in Kentucky, that are out there farming, with wind farms for people with shared pools. And there's a difference between solo pool mining and shared mining, is that with shared mining, that's using the power of every card and every computer they have in their infrastructure to mine Bitcoin per block. Whereas a solo miner just has that little lottery miner, little tiny little thing, to do it. And they call it a lottery miner because your chances of winning the rewards by yourself for a block is astoundingly terrible. You have a better shot of jumping out of a car and being struck by lightning and living than you do to win a block as a miner. But if you will believe it, I think up to this point in the last 12 months, we've had 5 people mine a block successfully by themselves with one of these little miners. They cost, you can get one as low as $20, $25, $40 if it's on sale. I would recommend that you get one with at least 1 or 2 terahash worth of power, so you're looking between the $100 and possibly $400 range. Shout out to BitAxe, by the way. They helped out our some of the members of our community. I need to reach out to that man. Let me write that down right now, because we're talking about it. But yeah, there are people solo mining. And you don't have to do anything. You just plug the thing into your internet and just sit back and just pray you hit it. But yeah, this is crazy. 2 of them in the past week. Each won the block. Is my answer to that. That's crazy. This is just going to feed this narrative. And hopefully to BitAxe and some of these other groups, the sales are going to start coming. I'm definitely reaching out to the guy from BitAxe because I need an affiliate deal. All right. Speaking of that, just want to put it out there. If anyone's looking for people to do content, video guides and stuff, feel free to hire me. Looking to definitely ramp up that part of my content creation cycle. Again, thanks to being a part of CreatorFi last week. It's given me renewed energy. My purpose is here to help other creators get into this space. It's my job now to help also protocols reach out to more creators to get in this space. We need to get the word out about decentralized finance to everybody. It doesn't need to be the same 75,000 people who are in this space every day. We need everybody in here because you, as a regular everyday user, need to understand that you are not in a system that benefits you in traditional finance. It's pain for the many and benefits for the few. In this space, you own your own financial journey, and that should be the way for everybody. Vitalik Buterin warns that Ethereum has backslid on decentralization and privacy. That is true. I don't think anybody would argue with you there, Vitalik. But I guess the question is, do we need decentralization and privacy right now? The answer is a little bit more nuanced because we've been in situations like what happened on October 10th, where decentralization and privacy held true as what you want, as opposed to what happened on Black Friday that day on October 9th, with the markets and centralized exchanges breaking and people scratching their heads like, what is going on here? You know, you see stuff like Cloudflare go down for, in essence, 4 hours. When I forgot when that was, and the whole world, 25% of the world freaked out. Right? We need decentralization. We can't have one entity rule all of this. The reality is, to get to the transition to where we need to, it's gonna have to happen. Look at USDC and USDT. They are centralized, yes, but they're working very diligently, in my opinion, to provide at least steward into the next stage of decentralization. Because you have groups like USDG with the Global Dollar Initiative from Paxos. You have other groups like Athena, more decentralized facing entities who are having a hard time getting traction, getting liquidity into the system. We're going to need circles. We're going to need tethers. We're going to need PayPals with PYUSD to continue to bring more people into the system until more decentralized and more private systems can come through and get that traction to get everybody to that next level, right? I'm doing a lot of talking today, guys. I apologize. It's been a really big week. Ah, okay. Let's talk about it, because I talked about this on the Twitter space. So, Mr. Beast. If you're not familiar with Jimmy, who's Mr. Beast, I definitely recommend, if you're a creator, watch his journey, because he is the king of content. He really is. You can't argue the point, honestly. He has a little bit of a complicated history with crypto. He was on a recent podcast stream with Aiden Ross, a very popular streamer on Kick, with regards to the Water Project, where they were using multiple large Web3 and streaming creators to help provide more exposure. That a lot of people need clean water, right? It's a beautiful thing to raise money for. Mr. Beast has been trying to raise money for years to get more wells into places that are underserved, like Africa, the Middle East, Asia, even here in this country. Water should be easily accessible to as many people as possible. Fully on board with that. Fully agree with that. He kind of jumped back when he heard the word crypto on by being on Aiden's stream. So I was like, let's kind of see what's happening here. But Tom Lee, chairman of BitMine Immersion, emerging as what we call an Ethereum DATCO, meaning a digital asset treasury company. They have a treasury. Their goal is to own 5% of the global ETH supply through various mechanisms, stock shares, whatnot. If you want to go buy some BMNR for exposure, feel free. Personally, if you're asking me, why own exposure and let somebody else make that money? Go buy the asset itself. Just go on a DEX, go on a CEX even, and just buy some ETH. Put it into a hardware wallet, store it there, and your Bob's your uncle, and you're good to go. This is a very calculated move, in my opinion. So I learned, thanks to the space I was on, that Mr. Beast was looking to start an academy for financial literacy. This was announced at the end of last year. So this kind of makes sense in terms of wink, wink, trying to get more bootstrapping into this initiative, right? Because Tom Lee putting $200 million into Mr. Beast says that he wants everyone to know what Ethereum is so that they can own 5% of the global ETH supply. Going after the king of content creation for most people who consume media in this space under the age, let's call it a 30. That's the best way to go, in my opinion. It makes perfect sense why they went after Mr. Beast, right? Because he's actively making content. He has a gazillion people following him, and he gets a ton of views. So the fact that, BitMine Immersion, trying to get people to learn more about digital assets and whatnot. Mr. Beast, I know you're not going to watch this, but if someone knows somebody and you need someone to help educate people to get onboarded into this space, remember this face. I am more than happy to give you some of my services. Or you can hire me for as many of those services as you need to get people onboarded into this space, because this space is important. It's a huge passion of mine, and everybody deserves to have a seat at the table when it comes to wealth generation and being in charge of their financial journey. All right. We'll see where this goes, though. 200 million is not a nominal figure. That's a lot of money. He'll get that back. I'm pretty sure that he will. I mean, Mr. Beast has food. They just opened a theme park in Saudi Arabia. I mean, the man's got a lot of things going. This will just be very good for the Mr. Beast treasury to try and make that financial literacy initiative as good as it can possibly be. You know, because I've been seeing a lot of, other groups that are saying that they're DeFi, and really they're more for the development part. They want to find more blockchain developers, which is great because we need more blockchain developers to make this an easy transition from what are Web 2 developers into Web 3 developers. There will need to be some changes, in my opinion, to make that easier, honestly. But, why not start early and start younger, which I think makes a lot of sense here. All right. The Solana-based Launchpad is gaining market share amid a resurgence in creator-linked coins. Okay, interesting. I can't talk about the one thing I was going to talk about because it's probably not good for me to talk about it until there's more news out about it. So it's interesting. There's a lot of people getting laid off right now, from what I keep hearing, amidst a huge push to hire new people. There are a lot of people who were laid off after DevCon in Buenos Aires in December, and at the end of November into December. So it's a mixed bag, right? Let's go move on to Google News. I will normally just search for crypto here, and we'll see what we get. Lead with fear. How crypto criminals stole 713 million. Well, you need better OPSEC, and we teach about that all the time. Here's why Coinbase. Yep, I've already talked about that. NFTs are not dead. No, I completely agree. NFTs, meme coins, they will always drive multiple blockchains. They could be the oil of a lot of different blockchains. Why? Because people still like to speculate, especially with NFTs, because they are tokens. Remember, they are tokens. They're not just pictures of whatever. They are actual tokens with smart contracts tied behind them, meaning they do have utility. And people need to actually involve more of that utility, in my opinion. I was hoping we'd be in a much different situation in 2025 than what we got with NFTs. And I have ideas. It's not for this, though. How crypto is used for political corruption. Okay, move on. DeFi Llama. What do we got today? Oh no, that's my site. Well, fine. Let's push my site. Flix.fun @C Soriano. This is my creator homepage. Thanks to the guys at Flix.fun for helping me put this together. Again, if you want to support me, especially if you're in the base ecosystem, check me out on Zora, Zora.co @the DeFi Professor. Would really appreciate your support. That means a lot to me. Hold a significant amount of my coin, and I will reach out to you to give you a ton of perks. I want to be able to give my holders, my token holders, whether if you're here on Zora or if you buy a fan pass on Den.show, also a base-facing group. And then, of course, on Retake.tv. I've been working with Retake.tv for nearly a year now. They've been very supportive in my journey. Thank you again to them so much for helping me get to where I'm at. Again, if you are interested in any of that, to want to support the journey, please do. For me, this is more about getting to people who know nothing about digital assets, know nothing about financial literacy, looking to get into this space. If you're already here, you understand things better, please check out our free group at Beacon DeFi. Rather, our free group at Beacon DeFi, which is called Total Value Locked. It's at school.com/beacon. I should pull up this. the site here, which I'll do right now. School.com/beacon. And you can join our free group. But if you want more, of course, click on the start here. You can get a message from myself and our CEO Andrew, and get our paths for becoming a competent DeFi investor in our Beacon Mastermind. We're the best go. You get personal mentorship from me, and you get all the great perks, such as the Beacon Digest, which is what I'm working on right now for news and various other things. You can get our Beacon Spotlight, which is where I go and find the best rates in DeFi every Thursday or Friday and put it out with videos. We have member calls, all that great stuff. Anyway, back to DeFi Llama. I'm just seeing if there's anything here that I might have missed. It's very close by in terms of most of the stuff. So there isn't anything here that I probably haven't missed. I'm checking my bookmarks if there's anything I need to talk about besides the New York Stock Exchange thing. We talked about the Twitter thing. That's going to be huge because it's going to change the way that people look at about just how projects are going to have to market in this space. It's going to change it in a really big way, and it's going to be interesting to see how it turns out. Let me go ahead and bring this article as well. This was from last week. I mentioned Bank of New York, but the other thing too is that they've actually tokenized it on Canton Network. Canton, we've talked about CC. I am bullish on them overall. This is going to be a very interesting institutional move to see how this works. This is very much a pilot, but I'm curious to see how tokenized deposits are going to work on the on-chain world. If BNY is going to tell me that I can access my money from my BNY bank account on a blockchain, yeah, I'm listening. Little secret. Bank of New York, at least the Mellon branch, is one of the largest places where USDC from Circle holds their reserves. So is that a little crazy? No. I knew that they would probably be one of the people who would lead into this. So this is a pretty big thing. Now, Canton Network is only for institutions, by the way, guys. But if you want the access to at least to how the success of Canton's going to go, then CC will be the coin that you'll want to buy there. But this is huge. The Swift move is going to be huge, and we're going to see exactly how this is going to play out moving forward. So we're actually going pretty long today. We're past 90 minutes. I don't normally go that long, but we'll keep going because there seems to be a little bit more news out here that I need to check through. Let me see, have I talked to anything else? Oh, Kathy Wood. I haven't met her in person. I've been to a couple of things she's spoken at. I do my best to try and go out to as many crypto conferences as possible. So working on getting to Denver. If you'll be to Denver, let me know. Would love to meet up, and you can either walk the floor with me as I talk to projects, or I'm probably going to do a couple of in-person sessions. A lot of people like to meet up and do some coaching stuff with me, which I'm happy to volunteer my time for, especially if you just want to get into the space. Happy to help you out. Feel free to reach out. She described the asset as a valuable diversification tool in her 2026 market outlook. Okay. Actually, this is interesting. I mean, I'm not a huge ARK Invest person, but I'm happy that they're putting this stuff out. This correlation matrix. This is important. Yeah, so you have them in terms of correlation with regards to other investment things here in the space. This is good. I like this. Again, you want to have a good risk-adjusted portfolio. In what we teach at Beacon, we call this our all-weather portfolio. That's not a trademarked word or anything. Ray Dalio talks about an all-weather portfolio all the time. But the idea is that you want a market portfolio of not only coins but also yield farming positions, which we specialize in here in DeFi, that works in any market condition available. And that's the whole idea, where it works in both a bear and a bull market, because your decision making for your positions will change, and you want to make sure that your portfolio can reflect that and stay profitable for you as things move forward. We talked about this last week. Bank of America and Morgan Stanley offering up their clients not only to have up to 4% in Bitcoin, but in Morgan Stanley's case, use E-Trade to get spot exposure to crypto assets. That's a first for their customers, and that's a first for the industry, in my personal opinion, at least for a bank. So this is going to be a lot of people jumping into digital assets. So, and I say this every year, we are just at the precipice, right? I mean, you're early. We're still moving, because 2018 to 2025, ideation, disruption, innovation, invention, and now in 2026, integration, privacy, prediction markets, AI agents. These are all things that you may have heard of. These are all going to play a huge part in how the first half of 2026 is going to go. Why? Chairman Powell's term ends in May of 2026. It's going to be fireworks after the end of his term. Not complete fireworks, because he's a governor, I found out, until 2028. So this is going to be a very fun, I say that with a very light tone, second half of the year. Because not only do we have the U.S. midterm elections coming up, so there's going to be all kinds of things showing how great crypto is and on-chain. But you're going to be early, especially if you're a content creator in the space, on how to get in and start building your following early. And maybe that's something I should look into my fellow unicorns and helping to create, because I know I can't do this by myself. But I do want everyone and everyone they know to know that they can have a seat at the table in decentralized finance. All right, guys, that's all I got for today. Hopefully you found some value here. Please, if you enjoyed what you saw today, feel free to, if you're on den.show, follow me there. If you're on retake.tv, follow me there. Buy the streaming coin. If you're on Zora, please purchase that. You can follow me at all of these here. The website is flix.fun @C Soriano. Shout out to flix.fun, of course, for the creator homepage. And also to everybody who's new. Thank you for taking your time to work with me. And we'll see you next time. Take care. Be kind to each other. And we'll see you in the next episode. For me, if not something tomorrow, Wednesday, 1 p.m. Eastern, for our Total Value Locked podcast on these same outlets. You can learn more about what we do. Take care. Have a great day.